Welcome to Looking at the Markets with David Modell. Today's episode is Technical Indicators. You have too much crap on your screen. Do your charts look like this? Well, sometimes people come to me and they tell me that they have 6, 7, 8, 10 different moving averages on their screen, and Bollinger Bands and Stochastics and RSI, MACD and Keltner channels and all kinds of things all at the same time. And their screen looks way too cluttered. And in my opinion, that is not really helping them. More is not necessarily better when it comes to things like technical indicators. Because how are you supposed to make a decision when your screen looks like this? First of all, it's too cluttered. You can't see what's what. Also, how can you make a decision when you've got 2 indicators telling you to buy, 3 other indicators telling you not to buy? It leads to indecisiveness and conflicting signals. So really, this isn't the way to go. Yeah, it's time to declutter your screen. Try this instead. Pick a couple of moving averages that fit your trading time frame and an overbought, oversold indicator or two, and leave it at that. Okay, I'm not saying you have to go this way. I'm just saying try it. Try it for a few days and see if you like it. I'm pretty confident that you won't want to go back to your old ways, your old cluttered ways. And as you can see, you can have a 200. I'm a swing trader. Okay, I'm not so much a day trader, and so I'm going to have the 200-day moving average and the 50-day simple moving average. Plus, I'm going to have the Bollinger Bands. I like those a lot as an overbought, oversold indicator. And just for confirmation, I keep the 14-period RSI as another overbought, oversold indicator. And in my experience, the 2 indicators, the 2 overbought, oversold indicators, the Bollinger Bands and the 14-period RSI, usually are in agreement. And as you can see, this example of GLD, the gold ETF, yeah, it's near the overbought level on the Bollinger Bands, and it's near the or it's in the overbought level on the RSI 14-day period. So there's not a lot of conflict going on here. Between the daily candlesticks over here, the volume bars down here, the 250-day simple moving averages, the Bollinger Bands, and the 14-period RSI, I've got plenty of information here. More than enough technical indicators, at least for me. Plus, in addition to all of that, I'm checking the news headlines. I think it's also a good idea to declutter this aspect of your trading. Pick a small number of reliable news sources and stick with them so you don't get information overload. And here are a few you might try. And I cannot vouch necessarily for the accuracy of any of these websites and their news, but these are the more popular ones. You've got Bloomberg.com, Wall Street Journal, which is WSJ.com, MarketWatch.com, CNBC.com, finance.yahoo.com, NASDAQ.com, and Morningstar.com. And as of today's date, these are all, the headlines on these are all free of charge, and many of the news items and articles are free of charge to view, many of them, if maybe not all, but you can get a pretty good amount of information if you just pick a few of these and read the headlines every day on your favorite stocks and companies. To avoid confusion, conflicting signals, and indecision, try cleaning up your screen for a clearer picture of the markets and hopefully, better trading outcomes. And if you'd like more help with this or with any other facet of trading, investing, or finance in general, I'll be glad to assist you. Go ahead and contact me anytime by email at davidmodell@gmail.com. I hope this was helpful, and I'll talk to you again soon.